Hello friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on contract costing. This is lecture number 4 and you can see the other lectures on contract costing in the playlist section of the channel. I would like to request all my viewers to subscribe this channel and to communicate about this channel among the students of commerce so that they can be benefited with the lectures that I have uploaded in this channel. I would like to request all the students to note the question with solution and see the procedure how I have solved the problem. If you find any difficulty in understanding, feel free to communicate with me through email and the WhatsApp number given in the description box. From the following particulars in respect of a particular contract for the year ended 31st December 2020, prepare the contract account. So materials sent to site rupees 1,90,000, wages paid rupees 1,20,000, wages outstanding 5,500, direct expenses 60,000, establishment charges 52,000, special plant installed at cost 2 lakh, cost of work not certified 25,000, value of special plant as on 31st December 20 1,70,000. Materials at site as on 31st December 20 21,000. Total contract price for rupees 12 lakh. Cash received 5,94,000. Retention 10% of work certified. Sale of scrap 2,000. General plant costing rupees 1,20,000 was used for 3 months. Depreciation on that is to be provided at 15% per annum. So before I proceed, let me explain the problem. Here, there are two plants were used. One, the special plant which is given, and this when it was introduced to the contract, it valued at 2 lakh, and the value of the special plant at the end of the year was 1,70,000. So depreciation for this special plant was for rupees 30,000. So there was another plant, a general plant costing 1,20,000 was used for 3 months. So depreciation on this particular plant will be charged at 1,20,000 and the rate of depreciation is 15% and the plant was used for 3 months. So 3 by 12 and the amount of depreciation is rupees 4,500. So two depreciation will be charged, one for 30,000 and the other for 4,500. Now cash receipt was 5,94,000 and retention money was 10%. So value of work certified is equal to 5,94,000 divided by 90%. So you will get 6,60,000. So 6,60,000 is the value of work certified and cost of work uncertified, that is cost of work uncertified or not certified, is 25,000. So now let us proceed with the solution. So here we are preparing the contract account. So contract account particulars rupees, then on the credit side also particulars and rupees. So the first item is material sent to site. So I have to write here as 2 materials rupees 1,90,000. Next is wages paid. 2 wages rupees 1,20,000 and add outstanding wages was for rupees 5,500. So sum total of these two is 1,25,500. Now this wages outstanding will be recorded at the end of the account. Now the next item is direct expenses. So I have to write it here on the debit side as direct expenses 60,000. Next is establishment charges. So I have to record it here. Establishment charges and the amount is 52,000. Next is the special plant that was sent to site. So I have to write it here as a plant. I can write directly 30,000 as depreciation, or I have to write it here as to plant 2 lakh, and the value of the plant at the end of the year I have to write it on the credit side as by plant CD 1,70,000. Next item is cost of work uncertified. So I have to leave some space here, and then in the next part, as I have done in my previous problem also, I have to write it here as by WIP value of work certified. So I have already calculated this at 6,60,000, and I can show the working also as 5,94,000 is the amount of cash received divided by 90%. So 6,60,000, and below this I have to write cost of uncertified work. And the cost of uncertified work was for rupees 25,000. Next is the value of the plant. I have already recorded it here. And the next item is the material at site. So by material CD 21,000. Next is the total contract price. Next is cash received, which is 5,94,000, and I have taken it to account. And then the sale of scrap. So on the credit side, I have to record as by bank account as sale of scrap for rupees 2,000. And then on the debit side, I have to write to depreciation on general plant. So 1,20,000 was the value of the general plant, the rate of depreciation being 15%, and the asset was used for 3 months. So total amount of depreciation was 4,500. So you can see the items I have already recorded on the debit side and on the credit side. So from the first part, we are going to calculate the cost of contract till date. So sum total of debit side is 6,32,000. I am writing it on the credit side also. And the balancing figure here, that is by balance CD, this is the cost to date. This is 4,39,000. Now I have to write this figure on the debit side as to balance BD cost to date, and the amount 4,39,000. Now this is the second part of the contract account, and the balancing figure here represents the accounting profit. So I have to write it here as to notional profit CD, and the total of credit side is 6,85,000, and the balancing figure, which is the notional profit, I have calculated it at 2,46,000, or you can say the accounting profit. Now this notional profit, I have to write it on the credit side, and this is the third part of the contract account. So by notional profit brought down, this is 2,46,000. Now I have to calculate the part of the notional profit that will be credited to profit and loss account. So to profit and loss account, since the value of work certified is more than 50% of the value of the contract, so 2/3 of notional profit, that is 2 by 3 multiply with 2,46,000, multiply this with cash received by work certified, which is 90%. So 90% is the cash received to work certified. So the amount that will be credited to profit and loss account is 1,47,600. And the balancing figure will be taken to provision as to WIP, and I have to write it here as provision. And the balancing figure is for rupees 98,400. So total of debit and credit side is 2,46,000, and this is the third part of contract account. So now on the debit side, I have to write the plant, two plant brought down at rupees 1,70,000. Then two material brought down, this is for 21,000. Then two WIP, value of work certified for rupees 6,60,000. Cost of uncertified work 25,000. 6,85,000 is the total of these two, less provision, and the provision was for 98,400. So in the outer column, I am going to write 5,86,600. And on the credit side, I am going to write the wages outstanding for rupees 5,500. So you can see the structure of the contract account and how I have recorded the transaction in this account. Hope all the students have recorded the question with solution in your notebook. And if you find any difficulty in understanding, feel free to communicate with me through email and the WhatsApp number given in the description box. Thank you. Thanks for watching the lecture.